Thanks for joining. I'm Chad Larson, Senior Portfolio Manager and founder of MLD Wealth. Today is a quick overview of how we run wealth when complexity and stakes are high. There's two pillars: institutional caliber investment management, plus the planning and structure around it. Our goal here is simple. It's clarity. You will know what our model is and what your model is and whether a conversation is going to make sense. We work with entrepreneurs, executives, affluent families, endowments, and people who have real wealth and real complexity. At your level, the challenge is not finding another idea or another fund. The challenge is running the entire wealth picture with discipline. Wealth stops being a portfolio and becomes a system. Business interests, personal assets, corporate assets, real estate, tax exposure, estate planning, and family priorities all interact. The risk is not just market volatility. The risk is fragmentation. Different advisors making different decisions in isolation and in a vacuum. And the client ends up with a plan that is not even actually a plan. It is a collection of things. Our clients want strong performance, obviously, but they demand more than performance. They demand alignment, clarity, and a framework that holds up when markets change and when life changes. The goal is simple: reduce unforced errors, improve decision quality, and build a structure that can support the next chapter, whether that is growth, liquidity, or legacy. The point I'm wanting to make here is the durability and consistency through cycles. Retention matters. It tells you how the framework performs when markets get uncomfortable. Team depth exists so that execution stays tight and responsive. I believe the industry is somewhat self-policing, and we happen to become one of the largest multifamily offices in the country for a reason, and that's our results. A lot of clients have cross-border reality, whether they call it that or not. U.S. exposure in portfolios, property, business interests, kids in other countries, travel, future plans. Markets are global. Risk is global. So if your view is local, your positioning is usually incomplete. We sit inside Canaccord Genuity's platform with offices and resources across 47 cities. The value is not the logo, it's the access. It helps us in a very, very specific way with better institutional research flow, better manager relationships, and better execution when markets move quickly. It also helps us avoid home country bias. People tend to over-concentrate on what feels familiar. That can work until it doesn't. The point is simple. If your wealth is global, your framework needs to be global too. We run institutional caliber investment management built around your objectives and your risk profile, not generic model. We build portfolios top down, structure and risk positioning first, and then we choose the right components. That is how institutions do it. We also have access to alternatives and vetted opportunities, but access is not the point. Alternatives are a tool, not a theme. We apply institutional screening and ongoing monitoring and only use them when they earn their place. We use alternatives when they improve portfolio behavior, add real diversification, and reduce reliance on traditional stock and bond relationships. You'll hear us say 360. It simply means we don't manage a portfolio in isolation. We manage the full system around it. An OCIO, or outsourced chief investment officer, fits right into that. You can delegate some or all of the day-to-day portfolio management while keeping control over the big decisions that matter most. We coordinate with your accountant, estate lawyer, team, and trustees, so everyone is pulling in the same direction. We handle the administrative details so your financial life runs cleanly and decisions don't pile up. Scale and reputation matter because they widen the manager universe. We can access institutional managers across asset classes, geographies, and strategies. At Canaccord, we don't have our own asset management firm and product to shove down our clients' throats. Access is not the strategy. The strategy is how we build the portfolio and how we manage it through cycles. We focus on durable construction. That means we care more about what the portfolio is designed to do in different environments than what worked in the last 12 months. Most outcomes are driven by three things: asset allocation, risk positioning, and ongoing oversight. That is where we spend the time. Portfolio management is not set and forget. We monitor, we rebalance, we adjust exposures, and we make sure the portfolio stays aligned to the client's objectives and constraints. The end goal is simple: clarity, confidence, and a portfolio you can actually stick with when markets get uncomfortable. Risk management drives everything we do. If you do not control risk, returns are just a byproduct of luck and regime. Our job is to know when a portfolio is going to act when the environment changes, not after the fact. So we stress test and run scenarios. We look at what happens when correlations move against you, when liquidity tightens, when rates reprice, when inflation surprises, when equity volatility spikes. This is not theory. It is portfolio design and oversight built around real stress points. We also bring in external horsepower. We work with Second Engine by Picton Mahoney and ACG, the Asset Consulting Group, to pressure test assumptions and portfolio construction. ACG's modeling tool gives us a clear framework to evaluate risk and return trade-offs across different portfolio designs. The outcome is consistency, a defensible process for positioning risk through different market environments, not a portfolio that only works when conditions are perfect. Success is not predicting downturn. It is being positioned so you do not have to make panic decisions when the stress arrives. Conventional diversification, different regions, different sectors, can still fail when global markets move together. In times of stress, correlations rise and everything starts to feel like the same trade. That is why we focus on true diversification, not assets that look different on a statement, strategies that behave differently when the environment changes. We look for structurally uncorrelated return streams, return drivers that are not dependent on the same outcome. That is what creates resilience. Alternatives are not about being fancy. They are about improving portfolio stability, reducing reliance on traditional stock and bond behavior, and can add return sources that can hold up when markets are messy. The key is implementation. We use alternatives intentionally, size them prudently, and monitor them with the same discipline as anything else. Generic portfolios are typically two parts, equities and fixed income, maybe spread across regions, maybe a few sectors, but still the same core drivers. The problem is when stress shows up, those drivers can start moving together. That is why people feel diversified right up until they're not. What we want is multiple return engines, equity risk, rate risk, credit risk, real asset exposure, and then strategies that can make money in different market conditions, not just when markets go up. That is where alternative assets, alternative strategies, and privates do come in, not because they're exotic, but because they behave differently and they diversify the sources of return. The key point here is diversification is not the number of holdings. It is the number of independent drivers inside of your portfolio. If you have more independent drivers, volatility becomes more manageable and the plan becomes easier to stick with through cycles. OCIO is not just investment oversight. It's a centralized decision-making hub for your financial life. Your portfolio is monitored continuously, not periodically. That allows faster response in dislocations and more tactical action as conditions evolve. It also reduces behavioral mistakes, which are often the most expensive mistakes. With MLD as your OCIO, your strategy becomes more dynamic, cost-effective, and aligned with your long-term vision. And independence matters. We are not pushing a proprietary shelf. We recommend what fits best. And institutional scale with deep manager relationships can expand access, including co-investment opportunities that are often out of reach for most investors. We believe the best advice is guided solely by your goals. We are not driven by corporately owned investment solutions. That keeps our advice objective. When markets get stressful, objectivity and alignment protect outcomes. A wealth blueprint is more than picking investments. It is a living strategy that connects all the moving parts of your financial life. At this level, investment management is necessary, but is not sufficient. If tax, estate, insurance, and liquidity are not coordinated, you can do well in markets and still lose ground structurally. The blueprint integrates the core areas of this slide: investment management, estate planning, retirement planning, tax-aware structuring, risk management, wealth transfer, and the practical coordination around cash flow and liquidity. The goal is that decisions do not conflict. You are not making an investment decision that creates a tax problem or an estate decision that creates a liquidity problem. Our job is to curate the right solutions, implement them cleanly, and then monitor them with institutional discipline because life changes. This is how wealth is protected and transferred intentionally, not by chance, not by default, and not by hoping that portfolio returns solve everything. We start with you, not your portfolio, because the portfolio is just a tool. It has to serve the life, the business, and the family goals. This slide is to show the dimensions we map before we make recommendations: assets and structures, life priorities, estate and legacy growth. and giving, your circle, and then the complexity layer that sits on top of everything. Complexity is usually where the hidden risk lives. Corporate structures, multiple jurisdictions, concentrated positions, family dynamics, liquidity events, tax constraints, and on and on and on. We take the current reality and future ambitions and build a blueprint that is designed to evolve, not a static plan you put in a drawer. The point is to create clarity around trade-offs and decisions, so you're not reacting, you are executing a framework. And the real outcome is not a number on a statement. It is security, opportunity, and a legacy that lands the way you intend. Our planning process is structured, tactical, and built to evolve. Because life does not stay still, and neither do markets. We are not selling a one-time plan. We're building a framework that can absorb change without breaking. It starts with a detailed discovery. We get the facts, the goals, the constraints, and the real priorities on the table. Then we move into plan design and plan finalization, where the structure gets built. This is where investments, tax, estate, insurance, liquidity decisions are all aligned. And implementation is where most plans fail in the real world. We drive it through, coordinate the professionals, and make sure it actually happens. Then the process continues. Life or market events happen, and we optimize, not reactively, but within our framework. The edge is simple. Consistency and follow through over time. This is what compounds, and this is what protects outcomes. If you are managing complexity at scale and you want institutional caliber investment management plus structure and planning, the next step is a conversation. We'll tell you quickly if an OCIO relationship makes sense and what it would look like for your situation.